Welcome back to Fast Market here on the Schwab Network. It's time for our cash tags. For that, let's bring in our next guest. That's Landon Swan, co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. Kevin, good to see you guys. Happy Monday.
Happy Monday to you. We're talking Shopify. Happy Monday to those investors that have been in it for the last year. It's had a nice run near 3-year highs here going into earnings. Got upgraded today, Landon. I mean, do you guys have the data that supports the nice move that we've seen in the shares?
Yeah, I mean, it's been a great year for Shopify investors. And short answer is yes. This is one that we've been bullish on for a while. And the data is lining up to continue to be bullish. And, we looked at Spotify a week or two ago. Sometimes when it's at the all-time highs, that's a good time to buy if they have good earnings, obviously. So just because it's at the highs doesn't necessarily mean that it's overbought. We really got to dig into the data. And we can start with last quarter. I mean, they had a fantastic quarter. They jumped about 20% on earnings. Their revenue grew by 26%. Their gross merchandise volume by 24%. Income more than doubled. So I mean, they're doing everything right. And a lot of it has to do with just the simple fact that they are making business very easy for their merchants. I think that's the key. When you start a business, everyone always thinks that, the time that you invest in is going to be focused on the product or the service that you're providing. But there's all these other headaches that go into running a business, especially an online store. And Shopify is taking all of that headache and, kind of doing it for you, at least solving it so that it's easier for you. And you can actually focus on the product or service, which is what entrepreneurs want to do. So they've got all kinds of tools that help these merchants from, navigating tax and collecting tax to handling regulations and laws and shipping for international orders, doing all like AI for automated product descriptions and discount creations, advertising campaigns, and just getting everything set up in a very simple way. They do a great job at that. And the data that we've got is showing incredible growth. So when you look at, how things are going for them, with the web data, it's really cool because we can actually parse it out by the business side and the consumer side. So obviously you want more of both, but what's interesting is you're getting more of both by quite a bit. So if you looked at this data back in November, the business side was growing by 8% year over year. Now we're at 19% year over year. And if you looked at the consumer side in November, it was plus 20% year over year. Now we're at plus 55% year over year. So those numbers back in November were strong. That's good growth, 8 and 20. But now we're at 19 and 55. So this is just, you can see here, those last two bars are outliers, right? But they're headed in the right direction. They're not outliers. They're outliers on the data set, but it's actually the start of a new trend. So this is very bullish for this company. They're doing a great job of not only making life easy for the merchants, but they're attracting customers. I mean, they've got this Shop Pay, which is the one-click buy. It's kind of like Apple Pay. You just click something. You don't have to enter your address and your credit card. It just makes the transaction much simpler, and it just removes another opportunity for the consumer to change their mind. So merchants love it. Consumers love it. That was one of the reasons that their holiday sales did so well. That was up 58% year over year, up to $11.5 billion. So they are just finding ways to make life easier for the merchants, make life easier for the consumers, and just get those transactions flowing. And they've just done such a good job that this price that they're at, the stock price, is absolutely justified. This is a buy high and sell higher kind of situation. So I'm not scared off by the fact that we're at all-time highs right now. I think it's justified, but I think there's even more to come for this company.
Landon, the chart backs up your data that says the revenue growth is strong, gross merchandise value is strong, financial services are strong, but so's the valuation is getting a little lofty, and they seem to, the only blemish that I read is that their international sales are slow and they're pretty costly for them to expand internationally. Does that matter, Landon? Can they still keep growing here domestically where, hey, we're not real worried about international because we're doing so well here? Is the stock not too high that doesn't matter? Because besides that, everything else here seems really strong.
Well, yes and no. I mean, I like to go to extremes when I try to think about hypotheticals. I mean, hypothetically, they come out and say we're done with international because it's too costly. what would the stock do, right? I mean, it would sell off quite a bit. So I think there's built-in value there. There's built-in expectations that they're going to figure out international, but there is still a lot of upside domestically. I mean, I think if you just ask most people if they use Shopify, they'd probably say no. They are all over the place, but there's so many merchants that don't use them, so many consumers that don't use them yet. But I think there's a ton of upside domestically, but they've definitely got to figure out internationally. They've got to make that work. And just based on how well that they've built out their platform and solved the problems for their merchants, I think that they're going to figure this out, hopefully sooner rather than later. But I'm not worried that it may take a little bit longer, or just it may be a little bit more costly, because that over time they're going to make that more and more efficient, just like they've done here in the U.S. So I'm not too worried about it. I do think that they need it. Like I said, if they came out and said no to that, that would be bad. So that's not what they're going to do. But it's a part of their business. It's a part of what investors expect out of them. So yes, I think that they can get there. It's just going to be a little bit of time and a little bit of maybe frustration for investors to make sure that they get to that point. But overall, I think that they've demonstrated that they can create value for their merchants, and they're going to do that internationally as well. So what I'm really looking at here is this expected move. One of the things that excites me is if you look at the last 4 moves on earnings, it's, I think, around 13%, 18, 18, and 20. So this stock moves significantly on earnings. Now, we're near all-time highs, so you could see a big move in either direction here. We're very bullish going into this at LikeFolio. I think our score is plus 76 right now, which, we get on the show a lot. We don't get up in the 70s very often, so we're very bullish going into this one at all-time highs. If they came out with good numbers and sold off based on those lofty expectations, I'd say it's a great buying opportunity for a long-term hold. But as a trader, I'm going into this taking a bet to the upside.
Yep, and that benchmark analyst came out, put a $150 price target, upgraded it. Putting it on the line there going into earnings results. But as I mentioned, stock at 3-year highs going into this report. Great stuff as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder of LikeFolio, breaking down more positive data that they have for Shopify. But Kev, as you mentioned, it's getting close to overbought territory on a technical basis.